Have you ever wondered what an exchange-traded fund is? Or perhaps you've heard the term ETF thrown around in financial circles and wondered how it all works. Well, sit back and relax as today we delve into the fascinating world of ETFs. An exchange-traded fund, often abbreviated as ETF, is a unique type of investment fund. But it isn't just any investment fund, it's also an exchange-traded product. This means that it is traded on stock exchanges, much like individual stocks. ETFs own a variety of financial assets. These can range from stocks and bonds to currencies and debts. They can even include futures contracts or commodities like gold bars. The specific assets that each ETF owns, along with their relative weightings, are typically posted on the website of the issuer, either daily or quarterly. One of the key benefits of ETFs is that they can provide a certain level of diversification. This is in contrast to owning an individual stock, which exposes the investor to the performance of a single company. Now, how does ownership of an ETF work? Well, an ETF divides ownership of itself into shares. These shares are held by shareholders. The legal structure of an ETF can vary depending on the country, and it might be a corporation, a trust, or an open-end management investment company, among others. As a shareholder, you indirectly own the assets of the fund. This entitles you to a share of the profits, such as interest or dividends. In the event of the fund undergoing liquidation, shareholders would be entitled to any residual value. Annual reports are also part of the package, keeping shareholders informed about the fund's performance. What's particularly interesting about ETFs is the way they operate. An arbitrage mechanism is generally in place, designed to keep the ETF trading close to its net asset value. However, deviations can occur. To give you an idea of the scale of ETFs, consider this. In the United States alone, $5.4 trillion are invested in equity ETFs, and $1.4 trillion are invested in fixed income ETFs. Europe and Asia also have significant investments in both equity and fixed income ETFs. In the first quarter of 2023, trading in ETFs accounted for a significant portion of the total dollar volume of stock market trading across the globe. To summarize, ETFs are investment funds that are traded on stock exchanges. They own a variety of financial assets and offer a level of diversification. Ownership is divided into shares held by shareholders, who indirectly own the assets, share in the profits, and receive annual reports. ETFs operate with an arbitrage mechanism to stay close to their net asset value. ETFs have grown so much in popularity and size that they now represent a significant portion of global stock market trading. So the next time someone mentions ETFs, you'll not only know what they're talking about, but you'll also be able to impress them with your knowledge.